This last video deals with Self-Employment Contributions Act. Okay, so self-employment tax is nothing more than the employer's portion and the employee's portion. So if you're self-employed, you pay your employer's portion of Social Security and Medicare and the employee, because you're an employee of your own company. So basically you're paying double Social Security and Medicare. And when I mentioned in the last chapter about some companies cheating and making all their employees 1099 employees, is so that they don't have to pay the employer portion. They push it onto the employee, so the employee pays an additional quite a bit of money. They pay their portion of Social Security, Medicare, and the employer's portion. So that's kind of cheating, I think. But we need to do, I think, some examples of this. So remember that Social Security is only paid on that first 127.2, and that the additional Medicare on 0.9 for the employee portion only. So let's take a look. We're going to first do case in point 5-6 number 1 on page 165. So let's look at number 1. It says, Samuel Henner earns net self-employment income of $97,200. He does not work a second job. So he is under the 127.2. And he's single. Does it say he's single? I don't remember. No, he's married filing jointly. So remember that the married filing jointly, you have to make $250,000 before your that additional self-employment tax comes in. So he's well below that. So Samuel's net self-employment income, he's going to pay 6.2 times 2. 6.2 for him, 6.2 for the employer, and 1.45 for Medicare times 2. So it ended up being 15.3%. I don't recommend that you do this 15.3% on every problem, because as we'll see in the next problem, it can be a little confusing doing that. So 97.2 times the 15.3 is 14,871. So what we could have done is 97.2 times 6.2% times 2, 97.2 times 1.45% times 2, and then added it together. Oh, I have a little problem there. Okay, let's look at number 2. Case in point number 2 on page 165. So we have Lisa Coleman. She earns self-employment income of $119,200. Aside from this self-employment, she works a second job in which she receives Social Security taxable earnings of $13,700. So or did her job $13,700, self-employed income of $119,200. So we need to calculate how much of the self-employed income will be taxed if the total income is over $127,200, which it is. So we're going to take $127,200 and subtract out the part that she already paid Social Security on, which is from her job, $13,700, to get $113,500. So of the self-employed income of $119,200, she needs to pay Social Security and Medicare for the employee and employer on $113,500. So we're going to take, for Social Security, for Medicare, the full amount is taxable because there is no ceiling. So since she's not over $200,000, no additional Medicare. Social Security tax on $113,500 at 12.4% is $14,074. Remember that's 6.2 times 2. And Medicare of the full $119,200 times 2.9%, which is 1.45 times 2, $3,456.80. So she needs to pay self-employment tax of $17,530.80. So if you ever wondered what self-employment tax was, this is it. It's the employee and employer portion of Social Security and Medicare. So I think that's the end. One thing to keep in mind is if this person had been over the $250,000 mark, then we would have had to worry about the additional 0.9%, which would only be 0.9%. We would have had to add that on, in which case it's really important that we keep those separated. So the $113,500 at 12.4% and $119,200 at 2.9%. It's easier, I think, to do it that way than it is the way the book explains it. And that's it for this chapter.